It is definitely constructive. I do think you have to see how the overnight goes and all the rest of it, because it seemed as if coming into the day, people were very concerned about the fact that that China recovery seemed like a one-day pop, and it kind of rolled over again overnight. So I do think we're still going to be sensitive to the push-pull of the world. If you remember back 12 months ago, you were starting to have this storyline build of a synchronized global economic expansion, right? It was a very rare event, and it was true for a few months. And now I wonder if we're going to have to get accustomed to the idea that there's going to be a much choppier global growth picture going into 2019.
And Sarat, I mean, you got the focus on Italy and everything that's going on there. You also have the focus on Brexit, the fact that we don't have a deal there. And then you have the ECB next year looking to potentially take a tighter monetary stance. Right. How should we think about this? And can they do that?
So at this point, kind of the market is testing everybody's federal government, right? I mean, the Fed here, is the Fed going to raise rates? Look what's happening. Is this a taper tantrum? Is this going back to 2016? In Europe, they're going to be hard-pressed to raise rates because emerging markets are down. A lot of their business comes from emerging markets, and you've got the China issue. But I think if companies start producing kind of earnings that are flat to maybe going up a little bit, you'll see the central bank starting to raise rates because of the whole liquidity that our Fed has talked about, and the market does not like that right now, and they're kind of expressing it with selling off, especially cyclical sectors, financial sectors, to say, hey, you're going to cause a recession, we don't like it. And then the question is, does the consumer step in and say, you know what, we're still going to spend, but we're taking a little pause?